Well, thank you for joining us this morning. I know you've got a super busy schedule. If you could just give a quick introduction, that'd be great.
Well, our long history, is that the introduction you want? There I was, a young child up on stage, first ever Money 2020 at the invite of the infamous Sanjib and his mustache. Had been in and around financial services before I realized this is my 30th year, which I'm crazy to even think I've been in it that long. I think most notably, and what brought me to the stage way back in the day in 2012, was I co-founded one of the first challenger banks in the world called Park Street Financial, paving the way for a lot of what we know as banking as a service today, inadvertently maybe causing some consent orders for the participating banks as, we were really working this out. And today I lead a consortium of community banks. If you looked at us as a single entity, we're the 10th largest bank in the country by assets, and the 5th, if you looked at us by customer count, because we have a bunch of banks that play banking as a service. And what we do is for community banking, which I think is vital to local economies, is we make sure that they not only survive, but they thrive. And we do that by innovating and working together. That's meant we've launched a payments business that's owned by the banks. We work in the space of artificial intelligence, banking as a service, cybersecurity, all the things that individually it'd be hard to explore, but given the network knowledge and economies of scale, they can really do a lot.
Wow, that's amazing. Oh, I know you mentioned to me that you're speaking on stage like 17 times before Thanksgiving. How is that? That sounds a little bit nuts to me.
Well, part of the beauty is I don't develop the content. I have this amazing job where I talk to innovative bankers and innovative fintechs all day. So it's really easy to produce content because I'm really synthesizing these conversations. And some of the most exciting ones, and what I love, is just the level of receptiveness that regulators have to wanting to hear the collective views of these banks that are pushing forward and how they're partnering with, they say, fintech, and they don't really know what that means. Now, unfortunately, it's taken years for the OCC to get their head around. It's like, oh, fintech does not equal banking as a service, or I like to call it partner banking now, is, it's much more. It can be everything from how do I extend what it means to be a bank? So we have an investment and a partnership with a startup called Careful. Careful is a tool for adult children to help manage their aging parents' finances, to find fraud, to find missed payments, to find double payments, right? It extends what the elder cares about and trusts their bank, but how do you make their life easier, right? And that's how community banks can compete and win. That's very different than banking as a service, right? They're not in the business of money movement or having to do KYC. You could be partnering with, say a Mantle or a Savvy AI that we work closely with, right? Those are internal tools, right? So fintech is actually very broad, in fact, too broad. And so I love the chance to talk to regulators and talk about how we dice up the business, and each has a different risk profile.
That's a lot to digest, and it makes sense. And you mentioned, and we kick it off with how long we've gone back, where we are right now. How would you characterize that versus when we first met?
Yeah, well, I'd say when we first met was kind of the pioneer era. Right? It was still very early, Simple was just getting going, right? Shamir and I were on stage together, you had the higher ones that had started in prepaid, were morphing to the banking as a service. And, you had what you guys were pioneering with TXVia, right? Building the first platforms, right? Now there's tons of platforms and it's easier to build, right? So then we hit the heyday with too much venture money funneling into it. So we had a whole bunch of Me Too's. And I like to quote Frank Rotman from QED on this. He's like, we are now in the great reckoning, the world where it's, hey, a bunch of things got funded too much, too high of a valuation, don't have right side up unit economics. And so unfortunately, we're going to see a bit of an implosion, right, for some of these companies that can't raise the next round. In my mind, that's not a bad thing. Right. I think part of the challenge is when it is too easy to build and too easy to raise money. You see a lot of superficial innovation, right? So now we're still seeing we're going to be the next Chime. It's okay, but Chime had to raise $3 billion to get where they are. That's not going to happen again. So if you want to be a neobank for X or to create a product that is going to do Y, you need to create a more meaningful wedge. And I think that is actually good for the industry because meaningful wedges is what really promotes inclusion, what really creates better financial outcomes for individuals all across the spectrum. The race to raise more money and to scale as quickly as possible, where you can inefficiently scale because you have too much money, says, hey, focus more on customer acquisition as opposed to customer value.
No, I think we're on the same page there. And I want to key on the word meaningful, and in relation to where the industry is and how, for example, your customers and clients, your community banks, can figure out what is meaningful. For example, like going to like Fintech Meetup. Like, why would you recommend that they might be should think about it?
Banks really need to focus on differentiation now. And historically, it has been sufficient that you can win in the geography and with human relationships. The future, in a world where you're not dependent on the branch network to conduct business and acquire customers, and if you're a community bank that doesn't want to pay a large amount for the deposits, you need to find new sources of value. And those new sources of value come from new partners. You're not going to get it from your core provider. You can get it from your core, everyone else. Definition of commodity. And it'll be overpriced and a really crappy experience, right? So you need to go find those partners like Careful that I mentioned. You need to go find those partners like Savvy, which is a low-code, no-code application of how do I do data analytics? Dare I say AI? They don't mention AI to the community banks because they'll freak out. But right, like how do I go find those partners that can help me reinvent what it means to be a bank and how I deliver banking services. And that's where Fintech Meetup is really powerful, right? One, it exposes you to a lot, but it's the speed dating aspect that I love about Fintech Meetup. But to get the most out of it, I think community banks really need to come in with an idea of what their strategy is. My partner JP is fond of saying, never show up at one of these conferences like going grocery shopping with an empty stomach. Because then you're like, give me one of those AIs and a blockchain and a digital account opening. If you don't know what your strategy is, like what am I trying to accomplish for whom? As Madeline, our team, who digs deep on this, really likes to push the where to play and how to win. You need to know where you're looking to play. And then what Fintech Meetup does wonderfully is you can set up all of these meetings with players that say, can you actually answer if this is where we know we want to play, how can you help me win and solve that problem? And the speed dating is a really quick filtering and say, does this align? Is it worth doing due diligence? Too often what we find is the banks of all sizes get too focused on vendor selection. Who is the right partner? But they haven't asked the question of what problem am I trying to solve? And then they end up in this vicious cycle where they're doing due diligence, right? Like the whole third-party vendor management pieces, and they can't get to a yes because they don't know what the problem is. So I'd say to get the most out of Fintech Meetup, figure out strategically what are we trying to accomplish for that customer. Set up the meetings to say, we have hypotheses that these can help us move forward. And I would even go so far as to tell the potential partner in advance. We are trying to grow deposits in our elderly population. We are looking to expand our deposit base with our small businesses. We're looking to streamline our underwriting process, but we don't want to fully automate it, right? Tell them what the problem is and ask them, very candidly, it's like, how can you help us solve that? And you can leave Fintech Meetup with the short list of, here's who I need to do a deep dive with.
I love that. And it's like, similarly, just as you wouldn't want to go to a grocery store, with an empty stomach, you wouldn't want to go to Vegas and all the buffets with an empty stomach either.
No.
And I liked like some of the questions and sort of the framework that you talked through, like how one of the, I as you know, I used to work at a bank as well myself, and depending on where we were in the economic cycle, different questions mattered more than others. How do you think about that in terms of like some of these questions you're talking about in the context of where we are in the macro environment?
Well, one, I want to, you hit one of my hot buttons, is I don't think we're in a cycle that you can wait out. We are in a new era of banking. A lot changed and it was glossed over during COVID. So digital transformation has been happening since 1985 when Royal Bank of Scotland rolled out the first electronic banking from home, right? Fast forward a decade and you have Stanford Federal Credit Union does the first website, right? So we've slowly been marching along, but that's a long, slow time until now. COVID happens. Suddenly all of that is accelerated, but we've also gotten used to a zero rate interest environment where customers weren't moving their money around and shopping. They also didn't have the access to their data. Now you start to layer on generative AI, and Alex Johnson likes to talk about it's like every deposit going to be a self-directed brokered deposit because the AI can tell me how do I maximize the return as an individual or as a corporate, right? Like money is going to move. We also know that money sits in lots of different places now, right? They can sit, sick of the trope that Starbucks is now a bank. I would actually say Starbucks is now a payment network, separate soapbox, but our money sits in different places, right? Like the amount of money that we personally have sitting at Amazon. Why? Because when I do the return, I want the instant credit. I know I'm going to spend it there anyway. If I look at where money sits from Alloy Labs as a business, it sits in different places because it's easier to move and sit it there because I know how we're going to use it. What's sitting in PayPal because of what vendors do we pay out of that? How much sits on the podcast side, is sitting in our platform as credits, that we buy credits sits there, right? So you're seeing money is moving and sitting in different places and moving faster from the business of banking. So now if, the left side of your balance sheet on, your deposits are under pressure because they're sitting in different places. And if you're saying, oh, I need to actually try and wait out because I'm worried there's going to be a recession. And what happens in the next election? I'm going to try and wait out a cycle. Well, now I'm having pressure on the top side if I'm doing flight to quality. And there's so much private credit available. So net interest margin's just getting squeezed. And that's not going to change. Even with rate cuts, we're never going back to zero. And the money's going to sit somewhere else. Customers have woken up to the idea that, hey, you're paying me 20 bips at best. I can get 400 somewhere else. I'm going to start to move my money because that's meaningful to me. And so I think to say where we are in the cycle, banks, especially community banks, can't afford to wait. That it is a new era of banking, not a next cycle of banking.
I love that. And sort of taking a little bit of a different tack. When I was coming down I know that you've got daughters 5 and 7 years old. When I was coming down the elevator this morning, there was 2 young girls, 5 and 7, about, and the 5-year-old.
Were they fighting?
They were not fighting, but what happened was that the 5-year-old pressed not the lobby. She pressed some other button. The older sister slaps her on the head and then they both start laughing. I thought that was hilarious. It was very lovely, great moment. But thinking about where we are, where the industry has been the past few years. Is there anything that makes you want to slap your head and laugh?
Oh man. So on the banking side, if I have another conversation where I say, what's your strategic competitive advantage? And if I hear it's our relationship with our customers, but there's no meat behind that, right? Sure, you bring them cookies, right? That's great and meaningful. You bring the small business cookies and you ask them, do they need a loan from you? Most small businesses and even, the more sophisticated corporates don't think in that world. They're solving a business problem, right? The job to be done for them is I want to expand. I want to add another truck. I want to add another shift. I want to add, another factory. What does that look like for me? And financing is a vehicle, a means to an end. And I think the industry needs to wake up to relationship is changing. The relationship has to bring value. The other thing on the banking side that makes me slap my head is in community banking, we hear all the time, it's well, we're more of a small business bank. We don't really care about retail. Back to this deposits problem. If you don't have a competitive advantage in low cost deposits, you don't have a small business lending business, right? You need both sides of the balance sheet to make that work. And that's true of the corporates too, right? Chase can get away with paying lower interest on their corporate accounts and even charging for it because they've got a full suite of treasury management. They bring value that the customer is willing to trade, a return for in order to do that. Now, the head slap on the fintech side, the number of startups we see where it is a founder who says, I have this problem that is worth going to address, and not realizing that is not a scalable business. Not in a world where you can't raise infinite venture capital at ever increasing rounds. They need to find a wedge that others share, not just the bank or the fintech product that I would care about.
No, this is super insightful, and we're appreciate your thoughts about where we're going in the new era as well. Any final thoughts you want to leave us with about Fintech Meetup, for example?
And so building and partnering is hard. Right. And there's more regulatory pressure than ever. I think that actually is not a bad thing. And I think it is the challenging times actually drives the most meaningful innovation, right? It's the stressors in the environment drive, the greater evolution as opposed to a slow progression.
Yep.
Right now we're, a new forcing function around, venture capital scarcity, right? Will force startups to be more efficient. How do I become more efficient? I find a wedge in how do I deliver more value that I don't need a huge amount of capital to scale. If I'm a community bank under pressure, I no longer can just count on, well, I can always borrow from the Fed and power my small business, right? And they're flush with cash because of PPP and other things, right? Like the stress will make them all evolve.
Yeah.
And I think that's ultimately really good for the environment. And if you're going to do that, you don't do it alone.
Yeah.
Right. And that's where Fintech Meetup is so valuable I don't want to say Fintech Meetup is a commodity, but searching for the right partner and the right vendor is the commodity part of the process, which means you need to do it as efficiently as possible. Fintech Meetup is an amazing way, if you're strategic about it, to pick those partners as efficiently as possible to say who aligns with my strategic goals.
Well, I want to thank you for being efficient in the discussion this morning. Also, I know your schedule is so busy. Really, really do appreciate you coming.
Well, I will see you at Fintech Meetup.
Yes, look forward to it, Jason. Thank you.